If there is one thing to take away from this video, guys, it has to be the fact that you need to do what 95% of traders are not doing out there. If there is one thing you need to take away from this video, it is the fact that if you want to succeed in trading, you need to follow what 5% of traders, of successful traders, are doing, and this could be something completely logical. This could be something completely different than what you're used to. For me, this one thing is called risk to reward, which I also call the king of profitability. And this has literally been the one and only thing that has helped myself and all of my students to achieve consistency, beat the odds in trading. If there was one thing that helped me achieve the returns I have achieved this week, this would definitely have been the risk to reward ratio, or the ability to cut losses quickly and to let winners run. If there is one thing that helped me to achieve a 50x trade in literally 3 days, it was the ability to follow my rules. And if there was one and only one rule that I would be able to pick and stick with it, this would again be the ability to cut my losses and let my winners run for as much as humanly possible. Now, the quintessential question and the issue is how to get there without blowing up your account. What has helped me to achieve this result and get into a 1 to 40, currently 47 risk to reward ratio, guys, on trade on DAX, and also 1 to 8.5 risk to reward ratio on Dow Jones. Okay, there are a few things that need to be taken into consideration. First of all, I don't really believe that taking this trade, at the moment of taking the trade, I actually knew where the price was going. In this way, I don't really think that anyone can predict the markets. I don't really think that anyone can predict if a certain trade will open up the opportunity to 10x, 20x, 50x trade. What I do believe though is, let me just go back to my drawing board and then show you how I am able to get into those trades and how I am able to score a lot higher returns than almost everyone else out there by following a simple day trading strategy, which, even though it's simple, it still takes quite a long time to master. And for this, all of my trading students can vouch for. It takes a minimum of 1 to 3 months to become a master at it. Based on this trade, let's say, my way of thinking is very simple. So I don't really think that you need to complicate at these points. I don't really think that you need to be trying to come up with some mathematical models in order to be able to crack trading and smash it. But you need to have some very solid principles and some very solid rules that have played out in your favor for many years. Then you can be actually, in a way, sure that you have the odds stacked in your favor. So let's say this is our entry. The entry needs to be picked in a very clever way. Just to give you a little bit of an idea of what times we trade only the market opens, and this will be about 15 to 20 minutes. This is when the best trading opportunities appear. But then if you're not really experienced, this might be also one of the worst times to trade, since the markets are more volatile. For the purpose of having and running a very high risk to reward ratio, guys, you need to have a very conservative stop loss. But at the same time, what is the magic and where is the catch is that your stop loss needs to be tight enough, but not too tight, so you don't get stopped out too early. Because what might have happened with this trade is, if I was using too tight of a stop loss, I would have been stopped out because the price actually retraced a couple of times before it shot down. But back to the drawing board. So if your stop loss, and this should not be a fixed stop loss, this should be a stop loss which is measured based on the market environments that you're currently placing your trade at. So for everyone that is saying, oh, your stop loss needs to be 10 points or 15 points or 20 points, I completely disagree with that. And even some of my students, after taking the course, have asked me, can I maybe just use a fixed stop loss? No, you can't. The reason being is because if you're using a fixed stop loss, then you're not taking into consideration the current market environment, and this could potentially destroy your trading strategy. Even if you have a very solid edge, a strategy that actually performs and excels at trading, then this could completely destroy it. Since for this particular trade, imagine if we were stopped out at this point, if your stop loss was too tight, and then you would have actually missed the whole 50 axis on the way down. And this is actually the most painful part of trading. Looking at your trades and not being able to find another entry opportunity to get into another short trade. And this is where you should also consider staying away from the price, because if you miss this initial opportunity, then you might have only one other chance, which is quick enough after the initial one. And then once the price is gone, the best advice and the worst thing to do would be to start chasing the price. The second piece of advice I can give you regarding stop losses in particular, and this would affect not just this strategy, but I would say most of the strategies out there, you should not be thinking of moving your stop losses too early, because this again would prevent you from being able to exploit the maximum of what the market is about to give you in a particular circumstances or a particular trade. So in this case, if I were to move my stop loss from here down to here, I would most likely have been stopped out. Even if I wasn't stopped out, if I show you my other trade, which is the Nasdaq trade, and it is not as profitable as this trade at the time being, but don't forget the fact that it actually went down all the way to 1 to 32 risk to reward ratio. I'm still holding this trade, but if, for instance, I decided to move my stop loss too early, which means moving it to break even, or maybe just lock the same distance from the stop loss to the entry, so meaning that if I move my stop loss below the entry around here, I would have been stopped out on so many occasions. So first one is here, then the second one potentially here, depending on where you move your stop loss to, but then the third one is definitely going to be here. So again, moving your stop losses too early can only lead to losing a very profitable trade very quickly. And the reason why so many times traders are being trapped into stop loss movement situation is that the price never moves in a straight line. The first thing, which is I believe very obvious to a lot of you. The second thing is that the price always retests the levels. And the third thing is, when there is a very strong move, it needs a lot of buyers or sellers in this case to accelerate the move. So if you were to achieve a very sharp move to the downside, then let's say we're short here, the price goes down, but then there aren't enough sellers, so the price will retrace back to the previous level to which it found sellers. Then if this is a genuine move, then it might the price might retest this level or this zone a few times before shooting down in a definite move to the downside. Moving your stop losses too early prohibit you from taking a very profitable trade, and this is one, if not the worst enemy of the highly profitable trader. And just to wrap it up, guys, there are a couple of things that enabled me to hold on to almost 50x trade on DAX and an almost 10x trade on Nasdaq. This is the fact that, first of all, I was using a stop loss which was tight enough but not too tight in order to enable me to get into a trade that can actually maximize its return if I hold it for a long enough time. In other words, if here, let's say for the sake of the example, if my stop loss is 10 points, I wouldn't be able to get a risk to reward ratio of 1 to 50. For instance, I was using 20 points stop loss. My risk to reward would have been only half of that. On the other hand, your stop loss should be wide enough and not too wide in order to allow for the price to not be stopped out too early. So if, let's say here, I was using a stop loss which was 8 points or even less, 5 points, I might have been stopped out because the stop loss is too tight. But at the same time, as I was saying, you should find the middle grounds of what works in trading, and in this perspective you should not be looking for a stop loss that is too narrow too tight. At the same time, you should not be looking for a stop loss that is too wide, and you should be looking for a stop loss that corresponds to the current market environment. It's just giving you enough space for the price to move, and in this particular case this might be 10, 12, 15 points, depending on the market environment, depending on the instrument that you're trading, guys. This is quite individual. You can't really say you need to use 10 or 15 point stop loss and this is your magic. After that, everything would be hanky-dory. You can't really do that. So instead of that, you need to look at the market environment. Where is your nearest swing high or where is your nearest swing low? Decide how to position yourself and use a stop loss which is tight enough but not too tight, so you're not getting stopped out. And the second thing, which is very important, is not to move your stop losses too early, because moving your stop loss too early especially when you're entering in a trade which has the potential to expand and give you many X's. This would actually preclude you from running a trade because, as I've shown earlier in this video, the price is actually going up and down and retesting the same level multiple times. I've seen it, you can imagine, tens of hundreds of times when I'm taking a double-digit returning trade. It almost always, to the T, we are seeing the same or very similar pattern, in which I'm not talking about a pattern such as a chart pattern, and this might take time for the price to behave or enough buyers or sellers to push the price in your direction. And if you're too impatient and you're moving your stop losses too early, this basically stops you out instantaneously and it doesn't allow you to run a trade for a very long period of time, and this is where the big money is made. I just wanted to give you a quick update before closing up this video, give you an update on the trades, of course, that I was revealing earlier today. The price has actually progressed, so let's have a look what happens. So I'm still running the DAX trade. It is currently giving me 1:67 risk to reward ratio. It's Friday and I do realize that the German elections are on Sunday, but I'm really far away from my entry, so I'm going to, on this occasion, let the trade run. From a longer term perspective, it looks like we might be making a major correction. I just closed my Nasdaq trade. It was a pretty good return as well on the trade, 54 X's, so 1 to 54. Considering I opened the trade on Tuesday, I closed it basically on Friday, just before the market closes, my buy order for 750. I also share this with my community, and some people think I'm insane, but apparently in a good way. So this was just before closing the trade. This was just after closing the trade. I'm still running the DAX trade. This is probably something I wouldn't have done in normal circumstances. The only reason why I'm doing it is because we are far away from the entry price. So for me, it almost doesn't make sense to close it here, because I'm at 67 X's. My goal is to get my first ever triple-digit returning trade, and since I'm not a fan of bias, I still believe we have a very good chance of hitting that figure after the elections on Sunday, especially if we have some not so pleasant surprises. I'm not gonna take any position on that, but then we potentially have the chance of the price reaching down to this minor demand zone. So let's see how is it gonna play out. I'm still with this trade. I have just closed a very decent return on the Nasdaq trade, so I'm leaving the DAX trade run. If there is one thing to take away from this video, guys, it has to be the fact that if you trade, like 95% of traders are trading out there, you will lose money. So the question is how to do like 5% of successful traders, or even less, so you can actually get there. And the answer is risk to reward.